Hello and welcome to Switzer Investing TV. I'm Peter Switzer, thanks for joining me. And on tonight's program, we're going to look at the impacts of the Israel-Hamas war on the stock market. We'll talk to Gable of Tribeca Alpha Plus and Mike Gable of Female Equities. We'll look at the charts and see what the stocks seem to be telling us about the impact of the war and other issues that can affect stock prices right now. Now, last week, some people I know went to cash. They were really spooked by the idea of this Israel-Hamas war. But they are unaware of what Lord Nathan Rothschild said many years ago, who said, "Buy on the sound of cannons, sell on the sound of trumpets." In fact, the stock market does not overreact long-term to a war. Short-term they can, but long-term they don't. Have a look at this chart we've got on screen right now. It'll show you what's going on. I pick out a whole lot of geopolitical issues that have affected the stock market over time. But look at some of the big ones. One I really want to focus on is the US terrorist attacks in 2001. The one-day reaction was a 4.9% fall in the stock market, and then the total drawdown over the period affected was 11.6%. But the market recovered in something like 31 days. So short-term, big effect, long-term, not. And so, in fact, 31 days is even short-term. So what I'm trying to say is, what we're seeing now is the short-term overreaction. The market will try and work out the longer-term effect, and if they believe that most companies of the world, most companies of a stock market aren't going to be affected, there will be a rebound. That's the important point. Three important points about stock markets and the Israel-Hamas war right now. This comes from Investopedia. They make the point, markets largely have ignored recent conflicts related to the Middle East and Iran. Broader regional wars, however, may have effects. So if Iran comes in, that could make it a bigger early drop, and it could sustain the amount of negativity in the market, but still there will be a short-term reaction if history is any guide. And still stock markets have this quick recovery a characteristic to them about these sorts of things, as that table on the screen did show you. Now, there are 8 reasons to see why stocks might rise over the next 3 to 6 months. First of all, US current reporting season, much better than expected. The market also thinks that no rate rises will happen in November and December in the US from the Federal Reserve. That's really good for stocks. We also know that some of the voting members on the Federal Reserve are actually saying they believe interest rates have gone high enough. Now also, the Fed is being criticised for being too data dependent, and this data often has a lot of lagged effects in it. Isn't really saying what's going on right now. And also, the December quarter historically is a very, very good quarter for the stock market. You've also got the 4th year of a US presidency as well. And also last year, when the market didn't do as well in the December quarter as usual, it was because of the rule of tax loss selling that came about because a lot of tech stocks were smashed in 2022. So people lost money on really well-known tech stocks. They then sold them before the end of the year, which drove down share prices more than they ordinarily will. But this year, a lot of tech stocks have done better, and so people won't be selling those stocks off. And also, the outlook, this is a really important one. There's a chart I'm going to put on the screen in a moment. So it shows you that the outlook for US company earnings is very positive, and that, I think, is a really big shock. And it's an important point that will drive home the reason for optimism in 2024, when this war, hopefully, is not as big a concern, particularly for humanity and also for the headlines in newspapers. Let's now go and talk to Gable of Tribeca Alpha Plus and see if she agrees with my analysis. And if you want to see the rest of the show, where we talk to Gable from Tribeca Alpha Plus and Mike Gable, who's an expert on the technicals and the charts that often show you where a stock price is going, you'll have to be a subscriber to the Switzer Report. Thanks for joining us, and I hope you do become a subscriber to the report. Go to switzerreport.com.au.